Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, February 6th. A higher trade across the ag space overnight as prices rebounded from yesterday's lower trade. Corn is fractionally higher. Wheat is up 1 to 2 cents. Beans are up 5 to 6. Meal is up less than $1, while bean oil is up about 15 points. Speculative traders were moderate sellers across the ag space yesterday, lightening up on their long positions in corn, soybeans, and bean oil, while extending short positions in both wheat and soybean meal. No major headlines overnight regarding tariffs. However, China has indicated that they must protect their interests from U.S. bullying while filing a complaint with the World Trade Organization. Near-term hope of a new trade deal with China appears to be fading as President Trump has indicated that he is in no hurry to speak with Chinese President Xi. China has reportedly bought several cargoes of South American soybeans yesterday, where their price does remain nearly $1 below what's being offered here in the U.S., that through the spring months. Healthy rains yesterday across some of the drier areas of east central Argentina will help stabilize crop readings in this region. Dry and very hot conditions prevail across northern Argentina really into about the early part of next week before their next meaningful chance for moisture relief. The Buenos Aires Grain Exchange is expected to be out later today with their crop updates. Yesterday, the Rosario Grain Exchange, they held their production forecast at 49 million metric tons on corn and 49.6 million metric tons on soybeans, both just below the current USDA forecast. Scattered rains have now moved into very southern Brazil and Rio Grande do Sul, bringing some relief from recent hot, dry conditions. Shower activity across the east central and center south region will begin to lighten up in intensity, allowing for some better opportunities for soybean harvest and corn plantings. However, expected still remain below the normal pace for at least the next couple of weeks. We do get export sales later this morning. Yesterday's ethanol production was above expectations and well above the pace needed to reach the USDA corn usage forecast. In addition, the monthly census export data was also above the weekly inspections reports. Inside trade for March corn overnight as prices hover just below the $5 level. Nearby spreads have widened out here in recent weeks as we approach the Goldman Roll that begins on Friday. Recall the index funds have a mammoth long position in corn at over 470,000 contracts, which is the largest in nearly 3 years. Next resistance for the nearby March contract is 508, the high from last May. I look for prices to remain at about a 470 to 510 range, spot prices here in the near term. Inside trade across the board in the bean complex as well. If harvest can start to get back on track in Brazil, I would look for prices to back off. Next support comes at the 100-day moving average, that at 10.23.5 for the March contract. Bean oil for now is just hovering very close to that 45-cent level. Look for a significant slowdown in bean oil exports as the record gap it had held below palm oil has narrowed considerably here in the last month or so. Meal is consolidating near its 100-day moving average at 308. And wheat prices are rebounded here a touch. March Chicago's hovering near its 100-day moving average, that after posting a 3-month high yesterday. Yesterday, Kansas City traded above the $6 level, but quickly sold off. Being above that $6 level was the first time in 3.5 months. Some cooler temperatures along the Black Sea region with very little snow cover, likely providing a little bit of a short covering bounce. Thanks for listening, everyone. Have a great day.